Hey guys, Dave Keller here with Market Misbehavior. We're looking at candle charts today, and I'm going to share with you a bearish pattern called the evening star pattern. I'll show you a chart that is showing that pattern today, what it means short-term versus long-term. So I love to use candlestick analysis or candle charts. This is a traditional Japanese form of technical analysis using really a very visually rich form of visualizing or of representing daily price activity. Bar charts and candle charts really show you the same data every day or every bar, whatever period you're looking at. It gives you the open, high, low, and close values. A bar chart shows that information as a bar, of course, with a tick to the left, a tick to the right, and a vertical line. A candle chart shows you the same thing, but in a much more visually compelling format, I would argue, by looking at clear candles, meaning up days where the close is above the open, solid candles where the close is below the open. By looking at that relationship, you can really get a good sense of when there is a change of character, which is a change, right? When the trend is in a certain direction and all of a sudden you have a reversal pattern, it tells you something may be different. And while these are not long-term patterns, when we're looking at a daily chart like this, it's really only telling you about the next 1 to 3, maybe at the most 5 bars or days, whatever period you're looking at. However, I have found them to be very compelling when you use them in conjunction with other technical tools like support and resistance levels, like moving averages, like Fibonacci levels, and so forth. Today we're going to talk about a particular candle pattern called the evening star candle. The reason why, or the evening star pattern, the reason why we don't talk about this very often is because it's a lot more rare than some of the other patterns you may know, like a hammer candle or a bullish engulfing pattern. I'll show you what this three candle pattern looks like, and also show you how it's comprised of 2 other patterns as well. Before we get there, by the way, if you like this sort of thinking about technical analysis, market history, investor psychology, behavioral finance, and all the other good stuff, why not subscribe to my channel? Also, give the video a like if you appreciate it. We would super appreciate that back. Leave me a comment below. What other candle patterns do you like to know about? You'd like me to cover in a future video? Drop a comment, let me know. Here we're looking at the chart of United Airlines UAL, and now let's set the stage. The airline group within the industrial sector has actually been on a bit of a tear recently. On some of my scans looking for new swing highs and new swing lows, stocks like UAL and others like Southwest Airlines and others in that group, Alaska, have had these nice starts to nice rotations to the upside. Names like UAL have actually been in a pretty decent run for a couple months now. So it's always interesting when you see a trend in place. This is when I find it's really helpful to be on the alert for candle patterns, particularly negative candle patterns like the evening star candle. This right here is what the evening star pattern actually looks like. It is a 3-bar pattern or a 3-candle pattern, and here's how it's comprised. There's a big up day, a doji candle where the open and close are almost identical, so it looks like a little cross on the chart, and then a big down day. That's it. 3 bars, right? A big up day, the doji candle, and a big down day. Now, what does this tell us? Well, the short answer is it tells us that we're in a distribution mode. There was an accumulation phase going into this pattern. This 3-bar candle tells you things are changing and reverting from an uptrend to more of a downtrend. There's more distribution happening, particularly on day 3. That's what completes that pattern. It suggests the next 1 to 3, if not a couple more bars, are most likely weaker rather than stronger. Suggests downtrend. Probably looking at the previous swing lows from the end of June as a potential downside objective. Now, why is this a pattern that we should pay attention to? If you think about it, the evening star pattern is actually like 2 other patterns kind of mashed up. It's a mashup of 2 other pretty classic technical candle patterns that you probably have heard of if you've looked at candle patterns before. We're looking at a chart of Tesla to show a good example of a bearish engulfing pattern. This might be one you know, and if not, you definitely should. This is when you have an uptrend, you have a big up day and a big down day. So it's a 2-candle pattern. Day 1 is a big up day. Day 2 is a big down day. It's called a bearish engulfing pattern because day 2, the body from open to close engulfs the first day's body. So wider range from open to close on day 2. So think about what this means. A big up day during an uptrend, pretty encouraging. We open higher, even more encouraging. We trade a little bit higher in this case, but by the close, we've undercut the entire day's open to close range. So open to close range. So think about that. The uptrend completely changing gears and suggesting short-term distribution. And as expected, the next 1 to 5 candles have been lower. From there, we've had a bit of a bounce, but overall, what that pattern tells you is to expect this instead of expecting further upside. It suggests at the very least a pause in the trend. Remember, it's not telling you there's a complete change in the trend. And even though Tesla's been up for 6 months, this is telling you it's going to be down for 6 months. It has nothing to do with that sort of time frame. It's just looking at the day-to-day movements. And it tells me in the short term, there's a bit of a pullback. So the way you use a pattern like this is, what happens? What this would tell you is on a day like this, where you're having the second day in the bearish engulfing pattern, it's confirmed, probably not a good time to reinitiate a long position or to make another, add to an existing position, because you're most likely going to get a bit of a pullback. You could probably wait a couple of days and get in at a much more attractive level. That's kind of what's happening so far with the chart of Tesla. So that's called a bearish engulfing pattern. Now here's a chart of Johnson JNJ, and this candle right here is called a doji candle. As I mentioned, the doji candle is like a cross on the chart, and the way that's created is the open and close are at pretty much the exact same level. They don't have to be perfect, they could be very, very close, but basically a very small range between open and close, and then a vertical line which tells you the high and the low. So what does that mean? In this case, it happened in a downtrend. A doji could happen at a bottom or a top, either way. But during the trend, this candle pops up, and what that represents is indecision. Instead of being a downward trajectory, making lower lows, lower closes, sort of in this downtrend, we open at a certain point, we trade all around, but by the close, we haven't gone anywhere directionally, right? It's literally an indecision point. That often suggests a rotation. It suggests, if you see that in a downtrend, to expect a bounce to the upside. If you see it in an uptrend, suggests a bounce to the downside. So in this case, it did end up leading to about a 3-week rally, but that, I don't think you can attribute that to the doji candle. What that tells me is, again, this downtrend is most likely over. We're probably seeing a bit of a bounce. It's identifying a turning point. Use it how you will. So now take those two patterns and combine them, and we get the evening star candle pattern, right? So you have the bearish engulfing pattern is the big up day and the big down day. Look how day 3 in this case engulfs the range of day 1, but in the middle you kind of took a break from that engulfing pattern and popped a little doji candle in the middle. So we've combined the two of them, right? So we combine the indecision of the doji candle, representing an exhaustion of buyers in this case, with the engulfing pattern that suggests not just are we undecided, we rallied, we're undecided, and now we're distributing, and now sellers are outnumbering buyers in a pretty major way. So what does this mean for the chart of UAL, and broadly speaking for the charts of airlines? I mean, it remains to be seen, but what this 3-bar candle suggests is that the most likely path is lower rather than higher, at least for the next 3 to 5 bars. That's probably a good expectation, a reasonable expectation based on what we've seen here. Now, this sort of pattern, any sort of candle pattern, can easily become negated. Your natural stop that's built into this sort of pattern is you overtake the upside extreme of the pattern. So if we would rally tomorrow and just rip to the upside and get above 57, by my experience, that would invalidate that candle pattern. It's no longer a valid evening star and suggests, much further upside from there, that the trend is now recovered and gone higher. But higher probability that we go lower from here, and suggests some weakness for airlines, particularly UAL, going into a long holiday weekend. What do you think about that evening star candle? Are you familiar with the evening star, the doji, and the bearish engulfing pattern? If not, you should be. These are classic candle patterns. I look forward to doing some more content on particular candle patterns, how to use them, what they look like, and how to trade around them. If there are other patterns or other indicators you'd like me to cover, just drop a comment below and let me know. I'd love to hear from you, and I hope to answer one of them in a future video. For Market Misbehavior, I'm Dave Keller. Stay safe, be well, talk to you soon.